Hello and welcome to Explain the Charts. Today, April 18th, 2025, we're taking a detailed look at Intel, ticker symbol Intel. We'll be combining our technical chart analysis with a look at the most recent news impacting Intel to give you a clearer picture of what might be coming next for Intel. Recent headlines indicate that Intel is navigating a complex situation, including potential benefits from a TSMC partnership, but facing challenges due to new tariffs from China. Let's start by reviewing those key news items before diving into the charts. According to recent news, a tentative agreement between Intel and Taiwan Semiconductor Manufacturing, TSMC, could revitalize Intel's foundry business. However, this positive development is overshadowed by China's new 34% tariff on U.S. goods, posing a threat to Intel's business in China, reducing its competitiveness and market share. Analysts suggest holding off on investing in Intel due to trade uncertainty, while Intel restructures leadership to boost chip development and innovation. Intel shares have tumbled after TSMC dismissed joint venture rumors. Now, let's look at the charts and see how these events are reflected in the price action. Alright, let's analyze the daily chart of Intel. We can see a significant downtrend developing over the past few months. The period from December 2023 to July 2024 showed an overall decline, leading to a sharp drop in August 2024, establishing a new lower range for the stock. We've been making lower highs and lower lows since then. Notice the large red candles in early April 2025. These correlate with the announcement of the new China tariffs and potentially indicate a strong bearish sentiment at that time. A potential support level we need to watch carefully is around $17.50, which hasn't been tested since mid-2024. Zooming into the 1-hour chart, we can see more granular price action recently. Looking at the candles from late March and early April, there's a series of volatile movements. The price attempted a rebound in late March, but the rally was short-lived, with prices dipping again in early April before hitting resistance and trending downwards since then. Currently, there appears to be support at $18.50. If that's broken, prices could fall even lower. Conversely, resistance is at $20, which will need to be cleared for any sign of bullish momentum. It should be noted that the 1-hour chart is showing a downtrend, supporting the bearish sentiment from the tariffs. A long-term target could be the 52-week high of $37.16, but that relies on a lot of positive price movement, which isn't currently indicated in the charts. Let's narrow down to the 15-minute chart for a closer look at the most recent price behavior. Here we see consolidation and ranging behavior for the past day. The price appears range-bound between $18.80 and $19.10, with neither bulls or bears able to make a decisive move. Given the overall bearish sentiment in the daily and hourly charts, it would appear more likely for the stock to break to the downside, but any indication of a break upwards could change this bias. To summarize, major price levels to keep an eye on in the short term: key support around $18.50 and resistance at the $20 level. Any breaks above or below these key levels could indicate further price movement in that direction. To recap, here are key takeaways. There's strong resistance at $20, which will be difficult to break without positive catalysts. There is key support around $18.50, and the 52-week low could be tested, so be prepared for that possibility. As always, trade responsibly, stay informed, and manage your risk. Check back with Explain the Charts regularly for future market analysis.